Welcome to Breaking Banks. Welcome to Breaking Banks. Yes, that is my radio voice, and joining us for the #1 global fintech radio show and podcast. I'm Brett King, by the way. Joining me in the co-host chair today is good friend Chloe James, Group Director of Media and Comms at RFI Group, and the host of our Women in Fintech series that we're running. Chloe, welcome back.
Great to be here. Thanks, Brett. Yes, I've just kicked off the Women in Fintech show, which we're absolutely loving at the moment, a Breaking Banks initiative, but happy to be here with you on the original today for an exciting chat.
The last show you had Adrian Harris and Lita Griffiths on, right? And tell us, what was that about, that show?
Yeah, it was awesome. We've started the first 2 episodes really going into the big C word, COVID, and how it's affecting consumers and banks and fintechs and I guess socially, the world socially, and how there's so much going on at the moment with politics and finance and everything. So it's been really interesting, some great female leaders, and then also really, I guess, diving into that topic part of me of being a woman working in this male-dominated field, although we are 50-50 on this call today, which I'm pretty happy about.
And how are the three of you at home dealing with COVID in Toronto?
Yep, we're good.
You, Josh, and the bubs.
Yeah, my husband Josh and baby Louise. We are good. We're coping. It's fine. Toronto's just gone back into another bit of a lockdown. But when you have a 15-month-old, you don't really have that much of an exciting life anyway. So I wouldn't say being locked down has been, I don't know, hugely impactful for me. But we're just being careful and mindful. And, we're lucky that we just get to go to the park and those kinds of things anyway. We're not going out to fancy bars or clubs, so we're not missing out on much there anyway.
Well, today joining us to talk about financial access and policy around open finance and open data, the team, a couple of guests from Plaid. We have John Pitts. He's the head of policy for Plaid. Did you say Plaid or Plaid, rather? Plaid, right?
We say plaid. Plaid. In Europe we say plaid, and in Scotland we say tartan because they insist on it.
Plaid.
That was one of my questions as well, because I wanted to get it right for the call.
Plaid. I knew it was plaid, but I was just reading, and anyway. So John, you're an advocate for consumers' rights to access, share, and control financial data, which I think, it's instituted in EU law, but it's not instituted necessarily outside of that. You advocate for financial data practices based on consumer first principles of transparency, permission, and privacy. You've done work in US, Canada, UK, EU, and Australia. And before joining Plaid, you were the Deputy Assistant Director for Intergovernmental Affairs at the CFPB. So working with Corey and those guys over there. Ginger Baker is also joining us. She's the head of financial access at Plaid. Her team's responsible for partnering with financial institutions to accelerate the rate at which they can embrace digital connectivity and enabling customers to enjoy that technology layer and how it integrates with finances. Previously, Ginger was Senior Director of Product at Ripple, where she led the development of solutions utilizing digital assets to move information more easily. And prior to that, she led product development for financial services at Facebook. So certainly a rich digital background. Ginger and John, welcome to the show.
Thanks so much for having us.
Thanks, Brett. Thanks,
Chloe.
Where are you guys really excited to be here?
Great. Where are you guys based?
So I'm based on the West Coast. I live just south of San Francisco in a little enclave called Half Moon Bay, which if you've never visited.
I know Half Moon Bay. My pal Robert Scoble lives in Half Moon Bay.
Oh.
So, yep.
And I'm in Washington, D.C. Because this is where the magic happens, as they say. And prior to February of this year, I lived on an airplane between Ottawa, London, Brussels, and Washington, D.C. for most of my time.
I know that feeling. I did 33 countries last year. And so it's a bit of a shock to the system this year. So, Chloe.
Not much flying from anyone. Well, listen, it's great to have you both on, Ginger, John. There's so much about Plaid in the media now, and there's obvious questions that we want to dive into. We've got a whole show with you, and I'm really excited about it. But let's just kick off with this open finance sort of concept and definition. I was having a chat with Brett before the show, actually. Being an Aussie, I'm based in Toronto, Canada, but being an Aussie, it's open banking to us. And across in Europe, open banking. And then I saw this open finance, and obviously there's different terms. So it's pretty clear that maybe we do need to define it a little bit. And I'm just keen to hear both your views on that. Before we kick in. And I said it would be quite interesting if perhaps there was a universal term at some point. I prefer open finance because it encompasses more than just banking. John, what are your thoughts on that?
Well, my thoughts are that it has to encompass more than just banking, because really what open finance seeks to do, at least in my mind, is give the consumer control over all of their financial information. And the reality is your financial information, the picture of your financial life, is not just what you have in your savings account or your payments account. It may include things like your income, which is held by a payroll provider. It may include things like your investments, your pension accounts, whether you have insurance. All of those things are aspects of a consumer's financial life. And I think open finance captures that quite well in a way that open banking doesn't. And also, just if you'll forgive me and let me put on my policy nerd hat very, very early in this call and probably not take it off for the remainder. I think it's a bit of a recognition that in the UK and Europe, they did make what I would consider a fundamental error in thinking about open banking at the beginning, right? Because open banking in Europe and the UK under PSD2 and the open banking law says the consumer has access just to some of their accounts. And after 5 years of development and implementation, both of those countries, both the UK and the European Union, have sort of immediately transitioned to a new rulemaking around open finance, because they've recognized that no consumer thinks of their payment account as being a different part of their financial life than their savings account. So you need a broader consumer data right. And this is the thing that, Chloe, I think your Australian friends have gotten better than anyone else. It's a consumer data right. That's the fundamental right that needs to be pushed. And Canada may actually be the next country to have a crack at it. And I'm pretty excited to see what Canada does. And excited about Canadian policy are words that, rarely pass the lips, but when they do, you should pay a lot of attention to them.
Absolutely. Well, as an Australian living in Canada, I'd love to take all the credit for those two
it's
countries.
It's completely you, Chloe. Like, I am sure that you are the seed crystal that is actually springing open finance into existence.
Well, it's such a hot topic down in Australia. But I would agree with you there that I think it was such a buzzword, wasn't it, a couple of years ago when it came out? And then I think it was almost like it, was like an iceberg, right? There was the tip of it. And then as the conversations developed globally around open finance, let's call it, there's just so much more there. Brett, would you agree? You have this conversation all over the world.
Yeah, absolutely. In fact, this is the real question: is who owns the data? I guess from a emerging perspective in the US, we've seen some of the major banks push back against aggregation providers in the past, saying they own the data, but the rest of the world has essentially taken a policy position here that customers should own their own data, and I think that's appropriate. The next stage of that, of course, is how do you get access to that data to leverage it as a consumer, and there's issues around that. But I think broadly speaking, I can't see, John, is there, the way this movement's developing, ultimately, I think, is there going to be any dispute over the fact that your transactional data and your historical, financial data is your data versus owned by the institution who holds it?
I think there's going to be some disputes around the edges, but the core sort of fundamental question of who's in control of the data? I think that answer has basically been given, and it's the consumer. And right. I'll say one other thing that really excites me, and Ginger, I don't know how you feel about this. This is probably something we should have talked about ahead of time before just jumping into it live. But one of the things that excites me,
we just go, we just do it as it comes.
Yeah, well, I probably shouldn't do it to my own colleague just for like the health and wellness of our next conversation with each other. But
it's too late now.
One of the things that really excites me about open finance as a different concept from open banking is, particularly in the UK, part of the goal of open banking was to create more competition for the banks. And so open banking is really a one-way flow of information. It is, hey, banks, you need to give information at the consumer's direction to non-banks. You have no right to get information from those non-banks back. This is about helping tech companies, not about helping banks. And I think the correct way to think about the future of open finance is it's a multi-directional network where banks are benefiting from open finance just as much as fintechs are. And ultimately, the real winner is the consumer. So, I mean, Ginger, you talk to the banks all day long. Do you see that same kind of sort of benefit on the horizon in open finance where banks can start using this data instead of just being sort of a source of it, trying to comply with the law?
Yeah, I think this next phase is going to be about turning this into more of an ecosystem overall, where the data flows freely in between the institutions and in between the utilizers of the data and the producers of the data, in order for this to be something where both types of entities get a lot of benefit. I mean, we're already seeing some adoption of Plaid's traditional products, and some of the financial services companies that we've been working with who are more traditional, but are waking up to the fact that consuming data from other sources is also really important in their own product development and their own innovation strategies. And so you'll see that merging and blurring of the lines between the way that fintechs have been doing this over the past 5 years and the way that financial institutions begin to do it more robustly going forward. I think one of the things that we've been really focused on is trying to ensure that the tools and technology that have been provided to the fintechs over the course of the last 5 years is something that the banks have equal access to going forward.
Right. The other element of this, of course, is if you think about the whole open finance thing, the objective being me as a consumer, if I get access to that data, I can now use technology to help me better manage my money. And we've seen very strong indications that behavioral finance, so getting the right messaging and right prompts in real time, as an example, is much more effective for the average consumer than budgeting. There's only about 13% of the American population who can effectively budget. So we need a new system of money management. Ginger, you want to jump in on that?
Yeah, no, I like this topic because in a prior life, I spent a lot of time on financial literacy and financial education with a project I was doing in East Africa. And, it was a 12-month project with a lot of really innovative approaches to delivering education and financial well-being messages and education to a general population. But what really works is when you actually embed that education in the moment that the customer is taking the action. So some of the work that we did at Facebook when we were embedding payment tools and financial access capabilities into the messaging apps was to trigger messages and recommendations for how somebody may be able to budget or use the money more efficiently. And it just sticks, right? You're taking an action at the same time that you're receiving the message. So the financial inclusion and financial education components, I think, are going to be something that we can all be innovating on better as we go forward, but is so important to have in the action itself, as opposed to something that's standalone and separate.
No, we found that with Movin. Obviously, Movin's a financial wellness company, SaaS company now. But we found that with the real-time receipt, that getting a receipt and instantly categorizing the spending had a very different psychological effect to seeing a summary of results later. Because, if you're in a Starbucks and you see, hey, you've spent, $400 on dining out already this month, and you're in a Starbucks or in a restaurant, or you're in a Uber, and you see you've spent $200 on taxis and travel this month already, suddenly now you're going, I've spent that much already. And that then produces a behavioral change, for the week or two after, suddenly you see a dip in expenses, right? Or a dip in spending on those items. So that seems to be more effective. So
rather than waiting for the credit card bill to come at the end of the month and then seeing the tally,
exactly.
which is the old school way of thinking.
Right. And then it depends on you having to do something next month, right? To synthesize that data and change your behavior.
Yeah, I was going to say there's also, it's beneficial to people. It's beneficial to people in the way that they think about improving their financial health and their financial lives. But there's also real business opportunity in that combining of action and financial service and financial product. I think I might be butchering this a little bit, but I think Andreessen Horowitz did a study recently showing that if you embed financial products into the platforms and tools that people are already using, it's something like 5x the revenue per customer. Yes. And that's a really meaningful business opportunity. So it isn't, I would like the conversation to stay focused on how we improve the financial health and well-being of people, but you can't ignore the fact that there's also a real rich business opportunity associated.
All right, so let me ask you both this, and then I know Chloe will jump in with another question as well. But so give me a view 5 years out. We're 2025. We've solved most of the policy problems. John, maybe have some legal framework around data, data access or whatever.
You're trying to talk me out of a job, Brett. There's always going to be policy problems that we need to tackle.
True. Of course, we've solved some of the policy problems, and new ones have emerged as a result. Right. But what does the day-to-day life of a consumer look like with access to open finance?
So I'm going to be a little bit wary in answering this question, because if 2020 has taught us anything, it's that trying to predict what the day-to-day life of anyone looks like in the future is a fool's game. But let me try and do a little bit of it with a giant asterisk hung on it, which is the uncertainty of what happens in the future. Already, the world is increasingly moving to real-time movement of money. So you already have this in Europe and in Canada. The US is a little bit behind, but we've got things like real-time payments from the clearinghouse and the Federal Reserve moving to FedNow. If we are successful in having a robust open finance regime tied to real-time movement of money, you suddenly have real-time money and real-time data being the norm for everything. And that opens, I think, immense possibilities for the consumer. I think about a consumer sort of going into the grocery store and, on that Thursday, you don't have to worry that your next payday isn't until Friday, because you've got real-time access to your payroll as you're earning it. And that real-time payroll access is talking to your real-time bank account. And your real-time bank account knows that if you buy this spaghetti squash at the grocery store, you're going to overdraw your account by $3. That overdraft will incur a $25 fee. Automatically, you can have something set up that gives the consumer sort of a just-in-time notification. You're going to overdraft by $3. Would you like to instantly move that $3 from your payroll account into your checking account so that it's covered and you don't overdraw your account? Like, can you imagine a world where there actually isn't?
Or an alternative financial services provider can, when you walk in the grocery store, can say, hey, it doesn't look like you've got enough for your groceries today. We can give you the additional cash, but it's going to be cheaper than an overdraft.
And all of those choices are there for the consumer, and they're in sort of a digestible, and as Ginger says, and I think this is exactly spot on, the best type of financial education is the exact right piece of information at the exact moment when the customer is engaging with the product. And real-time information and real-time money makes that possible. And this is why I am a bad employee of a startup company, because I don't say things like, it's going to revolutionize the world or completely change it. All I want is a relatively modest thing, which is if the bottom 50th percentile of consumers in terms of their ability to manage their money and make ends meet can have the financial sophistication and access of the median consumer today, you've just improved the financial lives of billions of people by an immeasurable amount just by making that one change. And I think real-time data and real-time money and consumer control of it allows everyone to be equipped with those key tools and make those sort of right at the moment smart decisions to help them manage their money better.
Not to mention real-time tax from the tax department in the future.
Yeah. That's John. I mean, John, I think that sounds incredibly advanced, actually. And I mean, it sounds exciting. And I'm wondering how realistic that is. I mean, Brett's talking, 5-10 years out or whatever it is. What are your thoughts on that sort of scenario that you've just described? I mean, that sounds like an extremely sophisticated platform. Do you think that's doable?
Well, Brett said I got to solve all the policy problems in the world, and then we got to have the future. So
I thought you were having your boring policy hat on, but that sounded pretty exciting to me.
Ginger, you should jump in there on how realistic it is, because I think a lot of the questions on how realistic are going to be as much business questions as they are policy questions.
Well, and product and creativity questions. I think a lot of this is just making sure that we're seeing what the future can bring in terms of what customers need, and where are those deeply felt but poorly met needs that exist in the world today, and how do we build products that land squarely in that quadrant. One example that I like is, I don't know if you guys have talked to Jason Brown, who's the CEO of Tally, but the Tally product it's doing the work for you, right? So that's what the future of open finance can deliver. It's apps and services and products that do the work on your behalf. And I think we've seen this like in the recommendation algorithms of Netflix and 1,000 other technologies and tools. Those services do the work for you in those domains, but we're yet to really fully realize that, I think, in financial services. So for me, that's what the future is the development and continued advancement of experiences that just reduce your workload. So you don't have to do the budgeting. You don't have to calculate your interest rates for credit card repayments and figure out which one to pay off first. You don't have to do the work of managing your student loans. And this is the Tally example I'm referencing, but like there's another tool that's doing that for you. And the apps that we're able to create with Open Finance answer the questions before you have them and provide the recommendations as you're moving through the experience.
And let's also sort of be cognizant of how much things have already changed in the last 5 years, right? My last mortgage refinance was 5 years ago, and I had to manually assemble paper files from multiple different places in order to apply for that mortgage. It took me about half a day of sort of signing in, downloading, uploading, printing, sending. Last week, because thank you, Jerome Powell, we have an exemplary interest rate environment right now. I decided to refinance again. I used Blend. They're fantastic. They were the service provider that SunTrust was using as the way to gather documents. It was a 15-minute process. I linked all of the accounts that were needed. I connected them to my SunTrust account. SunTrust said, "Great, we've got everything. You are good to go." And I could just walk away. That's 5 years, and that's an astonishingly different environment from one that all of us grew up in and even lived sort of our recent lives in. And COVID is driving even more investment in those digital processes, both by fintechs and traditional FIs. So I think the rate of change may be actually faster than we think it's going to be.
And we all think, and you talk about access and you talk about the general consumer, Ginger particularly, you spoke about that. What sort of percentage are we thinking of, let's just say the general American consumer is taking these kinds of actions, the usage of fintech products? We do a lot of research at RFI around this, around awareness and then usage, and just really fintechs kind of pushing this forward. I agree that the pace of change is speeding up, but
because China's like 80% of the population uses a fintech.
Yeah.
Daily, right?
Yeah. Well, I think, COVID, for all of its challenges, has certainly been an awakening moment for us all. Mm-hmm. I think we did some research recently that showed 80% of people who are recognizing now that they can use fintech to manage their financial lives as opposed to bank branches. Yeah. And so I do think that there is a very real moment that we're sitting in right now. Mm-hmm. One, it's the recognition that digital tools can be an effective way to manage your financial life. I think second, though, for us as an industry, this year has really taken the focus away from just the convenience factor of fintech and digital experiences, where so much of the last 5 years has been, what is the most delightful experience you can have in fintech and financial technology, to how can I best control my financial life and protect myself from actual health concerns, right? I need to safeguard my physical health, and digital financial tools, Wells Fargo's ability to allow me to manage everything that I do digitally as opposed to going to their branch, is actually protecting my health. Yeah. And so that has just been a really interesting shift. And I haven't thanked COVID for many things. I haven't thanked COVID for many things this year, but this might be the one thing that I say.
But there are some redeeming factors, and I think it will push things forward.
Yeah, certainly lower pollution because of less air travel as an example. But so I guess this one's for you, Ginger, but I know, John, you might have a comment on this as well, is obviously we're working on some pretty interesting technologies now, sort of personal assistant type AI capabilities, smart home speakers and so forth. And so I can imagine one of the typical things you're going to want to ask in the future is, hey, Siri or Echo. I've got to be careful how I say that because they'll start talking to me in the midst of the radio show. But asking them, can I afford to go out for dinner tonight? Now, so tech giants to me seem better placed to sort of do that embedded piece of putting this information in your life sort of contextually, because they own the technology layer we're using every day, the smartphones, the smart home speakers, soon, reportedly smart glasses and so forth. And so, do the tech players have a significant advantage over certainly the banks, but even the fintechs in respect to this?
I mean, the big tech players certainly have the audience. So much of what I did at Facebook was looking at the difference, the delta between the number of people in an emerging market that had access and used Messenger or another messaging app on a monthly basis, and the difference between that and the percentage of the adult population that had access to a financial account. And that delta is significant. And I don't think that trend that you see in emerging markets is too much different from what you would see globally around the world. I think that the audience and the channel for delivery is very interesting with big tech, but it doesn't change the fundamentals in the back for how financial information needs to be permissioned and procured and protected and managed in a very safe and secure way. And I think the financial institutions, really are the best at doing that and have been so effective over the decades of building the right kinds of securities to manage that.
And they certainly have that trust vote, or the research that we do, Brett, that I know that you're really across is banks, traditional banks, still have that trust piece in droves.
But it depends which market it is, right? Because in China, Alipay and Tencent WeChat Pay are more trusted than banks, but I think that's a market dependency. But
true, I think it's a market dependency, but I would say certainly in the West, every country we see, it's just this huge trust piece. But fintechs are edging on that.
And it goes to the theme, I think, that we've seen over the course of the last decade around how traditional providers of financial services, fintech and big tech can work together to create the safe, secure, trusted, but also accessible, interesting, and meaningful experiences when the industry comes together to identify what those solutions can be and build them together.
It's the ecosystem that you're talking about at the top of the show, actually, right? All of those people working in collaboration for the best result for the customer.
But it does. Right. It is a pretty big shift for banks. Banks have been very focused since the 80s on becoming the primary financial institution. And what open finance does is it really says, well, who's my primary financial manager or my primary financial coach? Yeah. And so do you think that do you think that fintechs may have an advantage here, John, from a policy perspective? Banks have sort of held us back a fair bit, but fintechs are sort of there pushing the boundary, right? And so do fintechs have sort of that honesty in the innovation that makes them a more likely, partner for you on a day-to-day basis as a consumer, you think?
So I think what the fintechs have as a advantage but I want to stress that I think it's a advantage right now, and it's one where the gap is being rapidly closed, is that fintechs have been rigorously focused on bundling their offerings by demography. And I think this is actually a critical thing to understand. The bank bundle was driven by geography, physical geography, right? Because in the brick and mortar era, where you build your bank branch is where you have your customer base. Right. The big difference with tech and fintech especially is the geography of tech is the 4.5-inch screen on your phone, right? And you can go to a different service provider by moving your thumb 1/2 inch. So the way that they have bundled their services is you look to the demographic that you want to have a perfect product for. And you don't really care that you're not getting someone outside of that demographic. I think banks are making that shift also, and also starting to think of themselves as a hub of a connected financial life for the consumer. And it's the banks that make that transition to, we're not bundling by geography, we're bundling by demography. And our goal is to be the hub of the consumer's financial life, but also give them as many connections as we possibly can, are going to be the ones who really succeed.
So much food for thought there. We've got to take a quick break, but we will be back very, very shortly to dive in more with Plaid. Stay with us. Okay.
You guys comfortable so far?
You're on mute. I
know.
Okay.
Yeah.
Yes. No, this has been fun so far.
All right. So let's come back from break. I'll do that, Chloe, if you like.
Yeah. Yeah. Awesome.
You can do the show close. All right.
Okay. Yeah. Sounds good.
All right. So coming back from break in 5, 4. Welcome back to Breaking Banks. Before the break, we were talking with John Pitts and Ginger Baker. They're from Plaid, and we're talking about open finance as the future framework for access to digital financial services and the evolution that the industry is taking place in order to sort of accommodate these demands. So let's maybe ask John you a policy question. I know we got into this briefly before, but Australia versus EU versus US. But who do you think is sort of really leading the charge in terms of open financing, in terms of actual effect that it's having at a consumer level?
So thank you for asking me a question that I get to give an incredibly complex and nuanced policy answer to that will be totally opaque to most people. And where I get to argue with the definition of words in the question while answering it, because that's what policy does. So let me break it a couple of ways. In terms of the actual consumer experience of fintech, and of open banking and open finance, the US is probably 3 to 5 years ahead of every other country. And by that, I mean, in the US, Plaid alone has 3,000 fintech customers for consumers to choose from. Compare that to the UK, who probably has the next leading actual market for fintech services. They have roughly 260 licensed fintechs for the entire country. And you know that because they have to get a government license in order to be a third-party service provider. So on the consumer level, it's the US. On the consumer data access right that will be the foundation for a really, really robust ecosystem, Australia has the strongest one. Their CDF right or CDR right is quite robust. And I think the thing that is the most promising about it, and the most promising about the approach Australia took, was they said very explicitly, we are starting with banking. And then we are going to move from sector to sector and bring more sectors into this consumer data right economy. So we're going to move to telco next, then we're going to move to energy, then we're going to move to healthcare, government, basically this expanding network where more and more of a consumer's financial and economic life can be brought to bear in the control of the consumer. The UK probably has the lead in terms of getting the details of a regulatory structure right? So Australia has the best concept, but they're still working out some of the minute details. UK has worked through a lot of the details. I think they've made some mistakes in implementing those details, but they're working on reconsidering them. And then that takes me to Canada, the most exciting country in the world right now from a open finance perspective, because the Canadian government has had the opportunity to watch sort of a US regulatory light approach, an Australia strong data rights approach that's sort of mid-flight, and a UK sort of very top-down, very prescriptive approach. And I think it's still up for grabs what the best regulatory approach is. And I think all of these countries are in some ways actively in collaboration, but also in competition with each other to figure out what the right framework is for this new financial world. And Canada has its next best crack at what this framework should look like of all of the countries. And from my conversations with them, I think they have a very ambitious approach, but one that also is going to be distinct from what we've seen in other places, and feels quite promising. We'll see sometime in November, I think.
John, what do you see as the major drivers of that? It's interesting, just those 4 different markets that you're talking about, and I'm thinking, in Australia, is it simply because it's just much smaller and therefore less complicated to deal with? 4 major banks who all have to agree on something. And I've been in Canada now for coming up, just over 2 years, pardon me. So I was actually there when that all kicked off. And I love that you've actually raised the other industries, because certainly, Medicare, and which is, our health provider was kind of coming into line with all of those. Everything was digital, basically, as the point that I was leaving. What do you see as the major drivers? Is it really complicated in the US? Crazy number of people and of banks and of institutions.
So I'm going to pause for a second. I've got a helicopter flying over. I hope you can't hear it, but that's part of the fun of living in Washington, D.C. is regularly getting buzzed.
That's because you're a policy maker. They're coming to you. Just kidding.
Yes, it's my Secret Service escort to wade into the dangerous world of open finance.
Be careful what you say. They're listening.
No, so I think that's a great question, because one of the most interesting things to watch has been the driver for open finance has been different in each country where open finance has been contemplated. In the UK, it was a competition mandate and nothing else. In Canada, it's been more of an innovation mandate, right? Mm-hmm. How do we drive more innovation in a relatively steady banking ecosystem with 6 major banks sort of dominating the market. In the US, it's been a consumer driven. It's 100%. It's been driven by consumer demand, and that has really done the market shaping here. So in terms of where some of those key decision points have been, I actually think the starting point of the regulatory intervention has had the biggest impact on why there have been differences. But you do point to some really important sort of structural realities, which is in the US, we have 10,000 different banks and credit unions across the country. That's an immensely complex market. And it has led Plaid to do some things like, so for example, one of the big things that's happening in open finance right now, both from a government side and a private sector side, is a desire to transition away from credential-based access to APIs as the key sort of fundamental infrastructure of the system. Well, in the US, the very largest banks can spend $20 million a year for 3 years developing an API. That's fine for a Chase or for a Wells or for a USAA. If you're First Bank of Omaha and you've got $100 million of assets under management as a small community bank, there's no way that's something that you can do. And so the question is, can you prevent a digital divide where only the largest banks have all of these connected services and the small banks get left behind? Plaid actually developed an API, Plaid Exchange, specifically for mid-size and small banks that can't develop their own API, so that they can connect directly into Plaid and ensure that their customers have the same access to services that the biggest banks' customers do. I think that's what you're going to increasingly see, is some of these sort of differences around the margins in terms of implementation based on country. But the fundamental starting point of, is this about competition? Is it about consumer demand? Is it about driving innovation? Has been the biggest factor so far.
Ginger,
you go first. And then
I was just going to add, I do think this really matters, though. I mean, it's exciting, right? Because we're in this new industry wave around the customer owning and being able to permission their data. But industry waves in fintech are not new, right? We've been through a few of these waves before. And if you take a look at the diversity of how an environment or in a country can unfold, like it largely depends on the approach to regulation and what they've stood to do. I mean, if you think back a decade ago at just how angry so many of the bankers in Kenya were, because the view was that the regulatory framework in Kenya gave an advantage to Safaricom. And that's one of the many reasons why M-Pesa became so successful. Like the regulatory approach had an impact, right, on the way that the
and it probably did, right?
Unfolded.
It probably did give M-Pesa an advantage,
but
it was necessary for financial inclusion.
Right. A country like Mexico where the central bank has been very forward-thinking in putting in place a bank-led interoperable domestic payment system. And that has a lot of foundational and effects on the bank's abilities to innovate, but it's not allowed for many of the wallet providers and mobile money systems to evolve. So anyway, it's just a point that I think that this really matters in the way that the solutions and the tools and the technology get shaped, and then ultimately the way that the products and services get delivered to end users.
Okay, so let me focus on that because you guys have been talking a lot about APIs, but of course most of the aggregation providers in the US are still relying on screen scraping technology today, whereas in the EU, we've mandated API access, we've mandated open access, and John, as you pointed out, that may be because we've got many more banks without the resources to do that in the US. But let's face it, the US has also been behind on pretty much everything real time when it comes to banks. Right? Fed now is Fed later. It's not even coming till 2024. We don't have real-time payments. We're going to be like the 60th country in the world to have real-time payments. And so you do have a moment in time here where US infrastructure is clearly showing its age. Right. And the fact that you've got by design after the Great Depression, we didn't want to put all our eggs in one basket. And so we deregulated the financial services industry and didn't want these foreign banks coming in and owning too many of our deposits because there was a risk. So we instituted sort of this community banking flavor. And while we've been consolidating that market, there's still a ton of community banks and credit unions in the US. We're obviously going to have to live with them for a lot longer. But does that in itself give the US a disadvantage when it comes to the real-time component? Because with PSD2, even though you've still got to pull the data from the API, if a customer requests it, in theory, you can get the data in near real time. Whereas, you might be 3 days delayed with a screen scraping technology because just the cost and complexity of sort of pulling that data down. So from a policy perspective, is there anything that's going to incentivize the US to say we need to mandate this for the banks, like the EU has, compared with this sort of progressive slow burn approach, which is not going to get us to a real-time API-driven world anytime soon in the US, right?
So I would actually, I'd argue with that only gently, and let me argue at it from two different directions. So in the first direction, let's set aside the UK because they had OBIE and not only a mandate for APIs, but created a quasi-governmental agency to write the API with bank funding and then impose it on everyone. If you look at sort of continental Europe, the mandate is there. The APIs are not necessarily there. There is still a substantial amount of screen scraping that is happening in gray space right now, right? Because the APIs are simply non-functional. No one has actually held their feet to the fire to make the APIs up to spec. And so I would question whether that's a fair comparison point. The other thing I would point to is I think particularly in the last year, there has been a really clear alignment between banks and aggregators about the desirability of moving into an API environment and having that come as a market solution. So you've got groups like the Financial Data Exchange, where Plaid is a board member, as are Chase, Wells Fargo, Citi, PNC, a bunch of large banks and a bunch of large aggregators, all coming together with one mission. develop an API that's a API that every bank can use as a free standard. I think solutions like that and solutions like Plaid Exchange offerings for smaller banks are probably going to ultimately move faster than some of these European regulatory approaches where sort of the mandate is there, but the pressure isn't. And as a result, you end up with sort of a fake legal right that can't actually be exercised. The other thing I'd say, and this is not to push back, this is just to say, there's a bit of a question of what approach do you want to take as a regulator. There's a question of market timing here. And what I see in PSD2 is PSD2 was written when the idea of fintech was a PFM app and not much more than that. And so, you write your entire regulation to support PFM apps. It turns out that PFM apps are not the entirety of the fintech market, right? There's a lot of other stuff outside of PFM. And because you wrote your regulation 3 years ago, you haven't really contemplated what's emerged in the market. And in some ways, you've trapped your regulation and your market in amber, and you are starting to limit the innovation. In the US, the regulators have taken a slower approach on mandates. That has created much more opportunity for a flourishing market and for private sector solutions. But we are starting to run up to some of the hard limits where there are just some fundamental questions that probably are not going to be answerable by the market. And those are ones where actually, by the time this goes out on the air, hopefully the Consumer Financial Protection Bureau will have released the very beginning of its rulemaking process to say, okay, this is what needs to happen. This is how some of these problems are going to get solved. We will see what that ANPR looks like, but we are very actively looking forward to sort of the last. Oh, sorry. Let me unwind my regulatory tongue.
No, we should. No, I mean, obviously, for those listening on the AM band, when we talk about PFM, we're talking about personal financial management. When we talk about PSD2, it's the Payment Services Directive coming out of Europe. But this one I haven't heard of. What is this?
So an ANPR is an Advanced Notice of Proposed Rulemaking. It is the first step in a regulatory process in the U.S., and it's effectively, hey, here's what we think this regulation should look like. What does everyone think about it? So the timing is uncertain. What the CFPB has said is they expect to have that out before the election, which means it could be out as soon as this week.
Great.
Or it already be out due to the time travel nature of podcasts.
The time travel nature of podcasts. Yeah, absolutely.
John, when we talk about financial innovation, are you really encouraged by what you're seeing at the moment?
I am. I mean, just from a personal experience, I talked about my mortgage application. It's shocking how much we grow accustomed to until we see a different thing. I think some of the innovation that's out there right now really does fundamentally transform people's relationship with their money. We actually conducted a nationally representative survey recently that asked people. It's the first time we've actually asked consumers, or I think that anyone has asked consumers, what their experience with fintech has been. 73% of consumers in the US said it gave them more control over their finances. And 68% said it reduced their financial anxiety. Now, mind you, this was a survey we put out in the middle of the COVID crisis and the financial crisis associated with it. So to have 68% of people in the middle of that crisis say, this is reducing my anxiety on something that regularly polls as the single greatest source of anxiety for consumers is, I think, a really significant result. And then there's also sort of dollar and cents return as well. The same survey, consumers making less than $100,000 said their use of fintech is saving them an average of $360 a year on rates and fees. Now, $360 in a country where 40% of consumers say they don't have cash on hand to cover an emergency expense, that's a material change in the financial well-being of millions of people. And I think that's an extremely promising start to build upon.
Maybe let's just come back to sort of the US right now. If you were a mid-sized US bank or because we've talked about the community banking angle, what role does open finance need to have within the bank? What sort of team Do you think banks should be building out for sort of this personal focus on finance, and what sort of innovation and technology deployment are you looking for? Maybe Ginger, you can jump in there to start.
Yeah.
If I was a CEO of a bank, what would you be telling me to do?
Well, first I would say, my mobile number is, no, just kidding. We would certainly be very eager to continue engaging with a lot of the financial institutions of that tier in the United States on this topic directly, because we have recognized that question is one that's quite common. Many of them are grappling with, how do I evolve my own systems and our offerings into this more digital, fintech-oriented environment as the years go forward, and take advantage of the next generation of banking customers. And so I think one, understanding like, where are the places that you need to meet your customers, and what are the tools and technology that you can deploy in order to make sure that your relevance and you're acting as the center, as the nucleus for that customer's financial life continues. And I think that there's a lot of different tools that they could use to do it. But I think the first step is just making sure that you need people on your team who understand how to do the investment and recognize the opportunity, the data-driven resources to recognize where your customers are going and spending their time, and then the strategies put in place to build it out. I mean, quite selfishly, like that is exactly what Plaid Exchange is. It is the API-based solution for data consumption and exchange, and we're really eager to offer that solution, which we've built very specifically for these folks this year.
Very cool. Well, we certainly appreciate you guys being on the show and discussing this. John, where can listeners find out more about the policy side of open data and Plaid's involvement in that?
So the best place is to look me up at the mildly embarrassing Twitter hashtag @PolicyPits, where I tweet on all things Plaid.
You wear that policy hat just all the time, man.
I do. I can't take it off, and I'm insufferable. And you should see my colleagues roll their eyes when I get engaged on something. It's basically, I only have one gear, and it never turns off.
And we haven't even got into CRA reform yet. So,
oh my God, I have so many thoughts about the use of.
I knew you would.
Let's just say, if we're going to talk in acronym speak, using CRA to undo CRA is just a beautiful piece of DC insider baseball that everyone should be wryly amused at. And I'll stop there because this is another
withdrawing
podcast.
The law, and yeah, exactly. All right, yeah. All right, so that's it is great. All right, so Ginger, where can we find out more about Plaid?
Yeah, we have. I think actually there's going to be a link related to the airing of this show. Plaid.com/breakingbanks would be a great place to start. And that's where you can find out more about some of these solutions that we've been talking about with Plaid Exchange. I mean, we're really eager to get credentials out of the ecosystem and move to protected API-based solutions. And we're certainly eager to talk to folks about that.
Awesome. So we will check it out, www.plaid.com/breakingbanks. Yeah. Awesome.
Sounds great.
That's fantastic that you guys have set that up. So, well, it's great to have you guys on the show. Please, keep us informed of the progress that you guys are making, not just here in the US, but globally. You guys have become one of the mainstays of financial health and open finance globally. So we congratulate you on that, and we thank you for your passion behind it, which is also clear from both of you, which is exciting to see. So thanks for joining us on Breaking Banks today.
Thanks for having us.
Yeah, this was fun. Thank you so much for having us here.
Oh, and Ginger, do you have a Twitter handle if people want to?
I do. Questions? Don't just find John and then you can find me. I actually don't know
We'll find you.
I think it's Ginger K with a K and then Baker.
Right, Ginger Policy Pits and
yeah, you can find Policy Pits more easily.
Yeah, good.
You got to be careful with that Policy Pits. That it's not policy is not the pits.
Yeah, exactly.
So Chloe, my brother and I were once in a 2-man a cappella group called the Pits of Despair. And when my children were born, I created a blog called These Kids Are the Pits to share pictures of them. So I am very happy to lean into any jibes that you want to make at the expense of my last name.
I absolutely love it. So if you're not looking up Plaid, everyone, just check out the pits, and I'm sure a whole plethora of accounts will come up on John. Listen, thank you everyone so much for listening into Breaking Banks today with Plaid, Ginger Baker and John Pitts. Great conversation there. Please give us a 5-star review if you check us out on the radio show. Look back at our back catalogue. I'm going to give myself a plug. Check out the new Women in Fintech show on Breaking Banks. It's a really good listen, I believe. And yeah, thanks so much, Brett, for having me on as usual. And that's it from Breaking Banks.
See you guys next week. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.